Have you ever wondered what private equity is and how it can help you generate wealth? Let's delve into the intricacies of this fascinating world. Private equity, in its simplest form, is an investment strategy that involves pumping capital directly into private companies or conducting buyouts of public companies. Now you might be familiar with traditional investments like stocks and bonds. They're popular, they're accessible, and they're widely understood. But private equity? That's an entirely different beast. It operates on a different playing field, one that is not as widely understood, but holds immense potential for wealth generation. Imagine being able to invest directly into a promising startup or buying out a public company to improve its operations and profitability. That's the power of private equity. It's about seeking out opportunities, taking calculated risks, and reaping potentially high rewards. But, as with any investment, it's not all roses. Private equity requires substantial capital, extensive due diligence, and a high tolerance for risk. It's not for the faint-hearted, but for those who are willing to delve into the complexities and navigate the challenges. It can be a highly lucrative investment strategy. Still, it's important to remember that private equity is not a standalone strategy. It's a part of a larger investment portfolio, a piece of the puzzle if you will. It's a way to diversify your investments, to spread your risks, and to seek out high-growth opportunities outside of the traditional investment avenues. So why should you care about private equity? Well, in a world where traditional investments are becoming increasingly volatile and returns are not as high as they once were, private equity offers an alternative route. It's a way to potentially generate substantial wealth, to invest in the future of companies, and to play a role in shaping the economy. Private equity might seem complex, but once you understand its intricacies, it can prove to be a game changer for your investment portfolio. So let's dive deeper into this world of private equity and see how it can revolutionize your approach to investments. So, how does private equity actually work? Well, it's a multi-step process, beginning with the raising of capital. Private equity firms raise funds from wealthy individuals, pension funds, and other institutional investors. These funds are then pooled together to form a private equity fund. This process is like gathering a group of friends to buy something expensive that you couldn't afford on your own. Once the fund is established, the private equity firm begins the hunt for companies to acquire. They're not just looking for any company though, they're looking for businesses with potential, those that are undervalued or underperforming, but with a solid foundation. More often than not, these are private companies, but occasionally, the firm might buy out a publicly traded company and take it private. The next stage is where the magic happens. It's the transformation phase. The private equity firm uses its expertise and resources to improve the company's operations. This could mean anything from streamlining processes, cutting costs, introducing new technology, or even changing the company's leadership. The aim is to increase the company's value over a period of typically 4 to 7 years. It's a bit like buying a fixer-upper house, renovating it, and then selling it for a profit. The final stage is the exit. The private equity firm sells the company either through a sale to another company, an initial public offering, IPO, or by recapitalizing it. The goal is to sell high, recouping the original investment and hopefully making a tidy profit. The profits are then distributed among the investors in the fund, and the private equity firm takes a cut as well. So, you see, private equity is a bit like a relay race. It starts with the baton being passed from the investors to the private equity firm. The firm runs with it, transforming the company, and then passes the baton back in the form of profits. In essence, private equity is about buying low, improving, and selling high. Why should you consider private equity as an alternative investment, you might ask? Well, let's dive right into it. Now, one of the primary reasons to consider private equity lies in the realm of diversification. Diversification, as we all know, is a crucial strategy in investment. It's like not putting all your eggs in one basket. Instead, you spread your investments across different asset classes to reduce risk. The beauty of private equity is that it provides an additional layer of diversification beyond traditional stocks and bonds. It's a different breed of asset altogether, often moving independently of the ebbs and flows of public markets. But diversification isn't the only reason to consider private equity. It's also about the potential for higher returns. Private equity investments often involve taking a controlling interest in companies, then working actively to improve their performance. This hands-on approach, coupled with the long-term investment horizons typical of private equity, can lead to substantial returns. It's not uncommon for private equity investments to outperform traditional investments, especially over the long haul. Now let's touch upon another key benefit of private equity: its ability to act as a hedge against traditional market volatility. We've all seen how unpredictable the stock market can be, right? With private equity, you're investing in businesses directly rather than through a public exchange. This means you're less exposed to the whims and fluctuations of the stock markets. And finally, private equity offers access to opportunities simply not available in public markets. These could be niche industries, innovative startups, or companies in need of a turnaround. These are opportunities you wouldn't normally find with traditional investments. So there you have it. From diversification and potential for higher returns, to hedging against market volatility, and accessing unique opportunities, private equity presents a compelling alternative investment option. Remember, with private equity, you're not just a passive investor, you're part of the journey of growing companies. Scene script. Like any investment, private equity comes with its own set of risks and challenges. Diving into the world of private equity, it's important to remember that just like any other investment, it's not without its fair share of risks and challenges. These hurdles could potentially impact your investment strategy, and it's important to understand them before jumping headfirst into the private equity pool. One of the most significant challenges of private equity is the illiquidity of investments. Unlike stocks or bonds, which can be sold on a whim, private equity investments are often locked in for a set period. This means that your money is tied up for the long haul and can't be readily accessed in case of a financial emergency. This illiquidity issue necessitates a long-term investment horizon. In other words, patience is key. Another potential roadblock is the high minimum investment requirements. Private equity is often not for the faint of heart or light of wallet. It typically requires a substantial financial commitment up front, making it a game that's often played by high net worth individuals and institutional investors. Additionally, due diligence is of utmost importance. Private equity investments often involve buying into private companies, which may not have as much public information available. This makes it crucial to conduct thorough research and analysis before making an investment decision. Investing in a private equity fund also means trusting the fund managers to make the right decisions on your behalf. Therefore, it's essential to work with experienced and reputable private equity firms. Despite these challenges, private equity can still be a lucrative investment if navigated wisely. It offers the potential for high returns and can be a great way to diversify your portfolio. However, it's not a decision to be taken lightly. Thoroughly understanding the risks and challenges is an essential step in embracing private equity as part of your investment strategy. Remember, the key to successful investing, whether in private equity or elsewhere, is to fully understand what you're getting into before you take the plunge. Let's sum up everything we've learned about private equity. Private equity, as we've uncovered, is a distinct class of investment that involves direct investment into private companies or buyouts of public companies that result in a delisting of public equity. It's a profound and complex field, yet it holds a wealth of opportunities for those daring enough to delve into its depths. We've seen how private equity works, from the acquisition of companies using a combination of equity and debt, to the enhancement of their value through strategic management, and finally, to the profitable exit, often through a sale or an initial public offering. This process, while intricate and often challenging, has the potential to yield significant returns, making private equity a compelling option for those seeking to diversify their investment portfolio. In our journey, we've also discovered the appeal of private equity as an alternative investment. With its potential for high returns and its capacity to provide portfolio diversification, private equity stands as an attractive choice for investors looking to step outside the traditional realms of stocks and bonds. But as with all investments, private equity carries its share of risks and challenges. These include the illiquid nature of investments, the high entry costs, and the potential for loss if companies fail to perform as expected. It's a game of high risk, high reward, and it demands a keen understanding of the market and meticulous due diligence. Despite these challenges, the potential for wealth generation that private equity offers cannot be overstated. The opportunity to invest in and shape the future of companies, to participate in their growth story, and to reap the rewards of their success is indeed a thrilling prospect. With the right understanding and approach, private equity can be a powerful tool to diversify your portfolio and generate substantial wealth. The world of private equity awaits your exploration.